Good afternoon and welcome to the Wall Street Crossover Show. I'm joined by Darren Sinden, who's market commentator at Admiral Markets. Good afternoon, Darren.
Afternoon, Zach.
This is possibly, we're on the edge of our seats here waiting for the non-farm payrolls. Millions and billions of pounds are going to be exchanged, dollars and everything else in half an hour's time. And obviously we're going to go through the backdrop to that. Markets have not been very happy over the last couple of days. They've pulled the rug a bit behind, from under the bulls.
They have. I was reading actually that if things stay as they are, this will be the worst week that FTSE's had in the whole of 2015. So I think that gives us a bit of context to the way markets have moved. Wasn't all bad news this morning though. If we look at the first of items here on European data, German factory orders for April are actually up 1.4%. That was well ahead. This is a month-on-month measure, well ahead of the 0.5% forecast and ahead of the prior 1.1% read. So I think I'm right in saying that both domestic and foreign orders were up very strongly as well on the prior month.
So the economists got that painfully wrong.
They did. I mean,
I always enjoyed that.
Well, I have a little bit of sympathy because we haven't seen a decent number out of Germany for some time, and I think that they have been a bit blindsided. But obviously, what we want to see now is some of the other data building on that. In terms of data from the UK, we had the Bank of England Consumer Inflation Expectations Report. This is where they survey the members of the public to see what they think is happening with inflation and interest rates. I'm not sure we should place too much credence on this because I'm
That's
not
a new one, isn't it?
It is a relatively new survey, and in fact they also asked the public how they think the Bank of England is performing. I think very few members of the public will be able to judge that very effectively. However, let's not berate the public too much. The consensus view was that over a 12-month period, inflation would be up around 2.2%. So they're optimistic, I suppose, that the economy is going to get going at some point in the next 12 months. What I thought was telling is that it was up from the prior read of 1.9% and up from February's survey number of 2.1%. Also, consumers think that inflation will be around 2.8% in 5 years' time. So whilst they're expecting prices to rise, they're not expecting them to be sort of galloping away over the medium term. Anyway, read into that what you will. The other key point, OPEC were meeting in Vienna. They made their decision just before we came in there. We were thinking that they might raise the output quotas given the bounce in the price of oil recently. Turns out that they decided to leave things as they were. What I thought was interesting and was mentioned by a couple of people was the Saudis couldn't wait to get away from the meeting. So whether that tells you anything, I don't know. But it's all done and dusted now. Oil was better on the back of it, and they're not going to pump any more for the moment. So that was European data.
Right. Okay. Well, let's go on to the next slide, and that's the London market big movers today. Well, I picked both on the downside.
Yes, I picked on two stocks. Well, I think there were very few gainers really of any note today in the FTSE. Vodafone down over 2% just before we came on air, and the market's unimpressed by the merger story, which we'll talk more about in a moment. Barratt Developments off 2%, and the sector has sold off this morning despite good numbers from Bellway, and they were very upbeat, Bellway. And I think you have to dig into the Bellway statement really to perhaps find the reason for that. And the Bellway management was saying that labour shortages present a real challenge to them fulfilling their real potential. So they think they can build, sell and complete on a good number of houses, but what they're saying is they may not have the labour pool to actually maximise their ability to do that. So
seems a little surprising that they don't have. Well, maybe it's just the right skills.
Well, I think that's possibly it, and that and that throws up this question, doesn't it, of immigration again, and trying to get the balance right there between getting what is perceived to be the correct number of people coming into the country with the correct skill set, and that is a very difficult balancing act for the government to pull off. So yeah. Very interesting. So let's have a look at the next slide. Right. Well, this is the big story, the gorilla in the room, if you will. Vodafone confirms it's in early stage discussions with Liberty Global. Now, we've mentioned Liberty Global 3 or 4 times in the last month. John Malone is sort of a puppet master of the communications industry at the moment. This potential deal with Vodafone has been mooted and talked about for some time, but it's not perhaps the deal that the market was anticipating. So they're talking about an asset swap, an outright merger. Although since seeing that Bloomberg is saying that an outright merger is probably now off the cards.
So basically, they're ruling out anything that the market would like.
Yes, yeah. I mean,
and the asset swap. I mean, it's like, why bother?
Well, good question. Vodafone, as we see, they spiked 4% after hours in the US, but as we saw from our earlier slide, is down 2% in London, and that suggests that the market doesn't see any kind of premium bid forthcoming under the current headlines. Yes, if the group merged, there'd be somewhere in the region of a £230 billion dollar company, but its scale, it's sufficient. Liberty boss John Malone had said previously, though, that he's not interested in the non-European operations, so Vodafone will probably need to sell off some non-core networks to go ahead with the deal. And the question here then is, would a sale of networks in India and Turkey and other non-European areas realise value for Vodafone shareholders? And I have to question whether it would. I mean, perhaps someone like Carlos Slim or one or two other groups might be interested in buying some of those established networks, but really, since Vodafone got out of Verizon Mobile, it's been almost like a rudderless ship searching for direction, and I don't think this is necessarily.
Well, I mean, the only good thing that seems to could come out of this is that somebody else says, "Oh well, we'll take over Vodafone just to stop that deal going ahead."
Well, maybe
Because then once it's part of Liberty Global, I mean, it's untouchable, isn't it?
Quite like, yes, very true. But I wouldn't put it past John Malone to sort of make this move to do just that, to put Vodafone into play.
All right.
And he may have another agenda. Who knows how complicated his mind is.
Okay.
Anyway, that's one to keep an eye on, and obviously it's a story that's going to be ongoing and not going away in the near future.
All right, we'll go on to the next slide, and obviously the big excitement at the moment, trying to guess what the non-farms are going to come in at. Yeah.
So it's the big economic data point of the month. Forecast today is for a read of 200,000 claims versus the prior 223. Just to re-emphasise this, the lower the number, the better for non-farm payroll. It's always to have to get your head around that one. But what we're saying is there are more jobs being created than the other way around. Oh God, I don't know. The higher the number, the better. More jobs being created, the less people that are unemployed. So we want to see a 200k read, which is down from 223,000 last month. Now the other figure, unemployment rate. That's the one we want to see going down. A forecast.
Well, no, I suppose in the way that the market, I mean, to sort of half dig you out of that one. I mean, the way things are at the moment, if there was a big non-farm payroll figure, that would possibly hasten the interest rates going up, and that would actually be bad for the market. So there's a little bit of that in there.
That's true. Bad news is good news because the rates will be lower for longer. But what we would like to see really is a lower unemployment number, actual percentage of people that are unemployed. However, the expectation in the market is not for that, and the range actually a very narrow consensus of between 5.3 and 5.4. The average is out of 5.4, believe it or not. But the lowest forecast was for 5.3. So we'll see there. And then average hourly earnings. We saw some wage data, didn't we, earlier in the week that suggested that things are improving in the States. We're not looking for a big jump here, though, in average hourly earnings. 0.2% versus the prior 0.1%. Anything above that would be a surprise, in my opinion. But these days, you can't rule anything out completely. So everyone's poised on that. But don't forget that the initial reaction to the non-farm payrolls number is quite often
it's the other way, the wrong way.
The wrong way, yeah. I would say 7 or 8 times out of 10 people, the initial trade is the wrong way, and then within about sort of 20 minutes, it's swung around and people have thought about it again. So there we are.
Let's go on to the pre-market movers and levels.
Okay. Well, I picked out a couple of second liners, shall we say, in the US to have a look at today. The first is Diamond Foods, but sort of a snacks franchise and distribution company even, DMND US. Well, they're up to 0.5% pre-market. The good story here, as far as they're concerned, is that they returned to profits. I think they made $6 million when they reported last night, but that was against a $100 million loss for the same period last year. So a turnaround story there, and the market likes what it sees, and so they've been rewarded to some extent. And then Zumiez Inc., which is a sort of lifestyle sports retailer type operation, they offered very disappointing guidance after the close last night, and they've been marked down by 8.8%, and I suspect that they might get hit further in the session today. In terms of levels to watch for the markets, Right, we've got, well, all European equities trading lower, basically. So FTSE, we've readjusted to the downside. So 67, we're now looking at as a potential support, but if it breaks that, a lower move is possible. 68.57, I put in there to the upside. The DAX, as I said the other day, 11,800 seems such a long time ago in this index, but we're back down to 11,167 on the downside and 11,290 as an upside level to watch. S&P, what was support yesterday is now moved over to resistance. Yeah. So we've got 2088 as our potential support level here. Then the old resistance level, or old support level now is resistance at 2100. And for the Dow, 17,826 plays 17,968. Anyone's guess really where
we had the flush out that was sort of feared, let's just say, in terms of even if the market's going to go up after the figures, they've cleaned out the bulls in quite a painful way.
In the short term, yeah. I mean, Americans seem to have the ability to bounce back, you know, almost regardless. But we shall see. Euro dollar, bit of a pause for breath. 112.04 now on the downside, 112.80 on the upside. Much to my surprise, the Aussie dollar has proved to be more resilient at these levels than I thought it would do. So 76.67 is our downside level. 77.12 we penciled in for the upside. Dollar yen, it really looks like the yen wants to weaken further to me, but for the minute we're stuck with 123.80 on the downside, 124.90 on the upside. And cable, no great shakes here, but 152.74 the downside, 153.85 on the upside. I think that's really the pound is looking for directional cues at the moment, and not quite sure where they'll come from.
But it's down more than today, so the dollar's winning against the pound rather than the euro. So.
Yes, it certainly seems to be. You know, the balance of power is shifted, at least for the moment, in that direction.
Surprisingly, yes. It's difficult to think of why that would be. But Darren Sinden, market commentator, Admiral Markets, thanks for the update. We'll, as I said, we're on the edge of our seats to see what's going to happen with the big figure at 1:30 in just a few minutes. That's it for the Wall Street Crossover Show, and we'll be back with more finance on Monday.